Let's go! Today I am going to be covering a project that has had a lot of hype around it the past couple of days, and that project is The Graph. The Graph launched its mainnet on December 17th and was immediately listed on several popular exchanges including Coinbase, Binance, KuCoin, OKX, and Kraken. Like most other coins that are lucky enough to get early listings by big exchanges, the Graph's native token GRT has been pumping hard. On Binance, GRT began trading at just 3 cents and reached a high of 78 cents just a couple of days later. In this video, I will be going over the purpose of the Graph project, the team behind it, and analyzing the GRT token to decide whether the price will end up crashing back down after the crazy pump this week, or if we could continue to see even more movement to the upside. So to understand why the Graph has so much hype around it, we must look back in time to 2017 when the co-founders of the project first got the idea for it. Yaniv Tal, Yanis Polman, and Brandon Ramirez were diving deep into the world of Ethereum and realized that one important issue holding development back was the lack of mature protocols to easily access data stored on blockchains. The group had their first prototype by the end of 2017 and they have been improving on it ever since. In January of 2019, Multicoin Capital led a $2.5 million seed round to raise money for the Graph team. More recently, earlier this year in June, the Graph team raised $5 million more through a token sale that included Coinbase Ventures, Digital Currency Group, Multicoin Capital, and multiple other investment groups. Whenever several notable crypto investment firms all invest in the same project, it is a very reliable signal that the project has serious potential to expand its market share and for the project's token to appreciate in value in the long term. Obviously, a lot of people took notice of these groups investing in the Graph, and that is what helped to create the massive hype we are now seeing. Like other tokens that Coinbase Ventures invests in, GRT received an immediate Coinbase listing upon launch, leading to an immediate influx of volume for the coin. So, what did Coinbase Ventures and the other firms see in the Graph that convinced them to invest? What does the project actually do? The Graph's self-stated purpose is to be an index protocol for querying networks like Ethereum and IPFS, where anyone can build and publish open APIs called subgraphs, making data easily accessible. The statement has a lot packed into it, so let me explain each part in a bit more detail. First, a couple of definitions are necessary. An indexing protocol is a protocol that organizes data to make it simpler and faster to access. Querying networks simply refers to any networks that will be sending requests for information. IPFS is the Interplanetary File System. Lastly, an API is an application programming interface. APIs are used to allow different applications or softwares to communicate and share information. Putting all of this together in simple terms, the Graph's purpose is to make it easy for developers to access and integrate historical and current data stored on the blockchain into decentralized applications. This will greatly decrease the cost and time required to develop decentralized applications, because without the Graph, development teams have been forced to develop and operate proprietary indexing servers. This required significant engineering and hardware resources and broke the important security properties required for decentralization. The founder of the decentralized exchange Uniswap, Hayden Adams, has said that the Graph has been instrumental in making smart contract data easy to monitor and use. Uniswap.info Analytics already has integrated the Graph to provide access to historical data on token pair volume, liquidity, and transactions. This integration is provided through the Uniswap subgraph. Subgraphs are APIs specifically developed by projects to meet their own needs. Subgraphs specify which data the Graph network will index from the Ethereum blockchain and how it will be stored. There are 4 primary roles that can be held within the Graph network. These roles are consumers, indexers, curators, and delegators. Consumers are anyone who pay for queries. Indexers are the node operators of the Graph network. They index information in return for financial compensation. Curators use GRT to signal what subgraphs are valuable to index. These will usually be developers signaling for their subgraph to be indexed, but could also be end users supporting a service they need or they care about. This signaling is done by depositing GRT into a bonding curve. While the GRT is deposited, the curators will earn a portion of query fees paid through the specific API. Delegators stake GRT to earn rewards without having to personally run a node. So, now that you have an understanding of what the Graph project actually does, we can move on to the GRT token itself. GRT is an ERC20 token, which means that it is Ethereum based and can be traded on dexes like Uniswap as well as on centralized exchanges. Currently, 1.2 billion GRT of a total supply of 10 billion GRT are circulating. At the current price of $53, this gives the graph a market cap of 665 million. Sorry, did I say $53? I mean 53 cents. Not bad for a project that launched less than a week ago. However, the question is whether or not this is a fair valuation of the project. Before we get into that, I'll first cover what GRT is actually used for within the Graph network. Indexers, delegators, and curators deposit their GRT to earn more GRT and to run the network, and consumers pay GRT for queries from the network. Currently, token distribution of the remaining portion of the 10 billion total supply will be issued at 3% annually to pay for network rewards. I think this is very reasonable rate that should not affect price that much, as the tokens will be entering the market gradually. Having tokens staked is also a good thing because it decreases the supply of tokens actually being bought and sold, which drives up demand. Each time a query payment is made, 1% of the GRT sent is burned, also causing a slow decrease in supply. An important thing to note is that 400 million GRT were sold during funding rounds, and those tokens were unlocked at the mainnet launch. However, there was an individual cap of $5,000 per person for the token sale. The token sale price was just 3 cents, so the people who bought into it are already up more than 15x. That means that everyone who invested the maximum amount of $5,000 already has made over $70,000 in profits. Some of the investors selling and taking profit could be the reason for the recent dip in price from the peak in the mid 70 cents to about 50 cents. Analyzing the price action of new projects can be difficult because there is far less proven support and resistance than other coins that have been trading for longer periods. Because of this, a more fundamental approach is usually better when predicting price movements of new coins. If we look at the past performance of other coins that had large pumps after listing on major exchanges such as Coinbase, it is evident that it is very common for these coins to retrace substantially before finding support and consolidating. One example of this is when OmiseGo, or OMG, was listed on Coinbase early this year and saw a massive pump before crashing more than 60%. Taking all the factors into account, I think it would be wisest to let GRT have a week or two to cool off and establish itself at a level of support before deciding if you want to buy. This is a project that will be around for a long time and has the opportunity to steadily grow as more large companies begin utilizing blockchain technology. A sophisticated and adaptable service like the Graph is the perfect fit for those companies as well as small self-funded teams or lone developers. However, I think the probability of price dipping further is much greater than the probability of it shooting further up, and even if it did, at its current market cap, it is far less likely to return another quick 10x or even 5x, as a 5x from the current price would place GRT almost within the top 5 cryptocurrencies, which is a difficult challenge even for the most well-known and established names within crypto. Thank you for watching. I hope you enjoyed this video. If you did, make sure to subscribe to the channel right now, and yeah, I will see you guys in the next video.